Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Tuesday, October 26th. Thank you so much for making us part of your day. I'm your host, Jesse Allen. Thanks for being here as we are working through this final week of October. MarketTalkAg.com is our home on the web. That's where you could find us. MarketTalkAg.com is the place to find all of our streaming sources, social media, and much more. Well, we got a lot to look at today here in these markets. Had a bit of maybe profit taking here at the end on grains. Plenty of storylines to discuss. Let's bring in our good friend Matt Bennett with agmarket.net joining us here today. Matt, good afternoon to you, sir. Great to have you back on the show.
Yeah, absolutely. It's great to be back on here. It was a very interesting day, kind of a quiet day to start with, and then all of a sudden you look up and corn's up a nickel. It's like, wow. Not terribly surprised necessarily. Corn started out the week kind of in a quiet tone and really didn't do much on Monday whenever the bean market was rallying. So wasn't too surprised to see corn show up and play a little bit today.
Yeah, and we can start on that corn market because obviously that was the winner of the session. I mentioned the sell-off. Spring wheat was leading pretty much all day, and then that faded here at the end. We'll touch on that in a little bit, but you look at this corn market. I know you and I were chatting a little bit off air. I'm not surprised. You said you weren't surprised that this corn market, rallied a little bit here today. I know there's a lot of good fundamentals beneath this corn market right now. It's just kind of been hanging around that 100-day moving average here today.
Yeah, absolutely. You're kind of in a wedge formation here. You've got all your support is between your 100-day and your 200-day, and that's basically where the market's hanging out, is right in between the two of those. And so I don't know. I guess my personal opinion on corn is whenever you start thinking about the whole situation, let's take a few things into account. For instance, in my part of the world, basis going into the weekend at one of the big end users was running a nickel over, and then going into the weekend, they went to a dime over. And then Monday morning, they went to 15 over. And then around noon, they went to 20 over. And I talked to one of the originators, that I do some business with, and said, we'll probably be 30 over by the end of the week. And so, and they're also running 5 a.m. to 10 p.m. 6 days a week. And so this is in the midst of, what is almost a record crop. And so, it's a very interesting dilemma we've got going on here. And at the same time, you're talking about in my part of the world and in several parts of the world, especially where you do put anhydrous on, there's not very many people that feel real confident they're going to get anhydrous on this fall. And so you've got a big question mark as to, we're already at a 1.5 carry. That's not going to get any bigger, but it's unlikely at this stage. It looks like demand's strong. Ethanol grind's just fantastic. We're seeing some export business finally show up. What happens if we ended up at a 1.3 or 1.4? That means we need 93, 94 million acres. Jesse, I don't know if we'll get 90 million acres. I really don't at this stage of the game. If you don't get a good fall anhydrous run, we're in big trouble as far as the logistics to get enough anhydrous to enough people, not to mention most of these people are telling you can't get 32 and 28% or urea for next year in any big amounts. So this whole corn complex has got some very dynamic stuff going on, which makes it really hard to get bearish.
Yeah, very, very true. And great that you pointed that out. And, on the flip side of that, a lot of people have been talking about soybeans and the edible oils and how we might see more soybean acres next year with all these rising prices of fertilizer and everything else. And we come in here today a little bit weaker on beans. We got some of those rumored China purchases announced, and then we just didn't really do anything. I personally wasn't too surprised that beans took a little bit of a breather here today. I feel like they maybe needed it just after the last couple of sessions, Matt.
Yeah, last week, basically, beans couldn't hardly do much of anything while corn was kind of leading the charge at double-digit gains. You come in here on Monday, and all of a sudden, beans are the star of the show. And, I think all we can point our finger at is that rumored Chinese business, which we verified here this morning, some Chinese business in Mexico actually was in to buy a few soybeans as well. So pretty good demand on beans. Crush margins have been fantastic. Renewable diesel discussion is exciting. It's not yet come to pass, but it is coming for sure. There's no question about it. And so soy oil will be, again, star of the show when it comes to crush margins, which hadn't been the case in the past. So, there's a lot of very interesting stuff whenever it comes to soybeans. But I guess the way I would describe it is you've got a big crop. Okay. Now, yes, this rain event we had over the weekend didn't do anything to help this bean crop grow. I've been telling people I thought the USDA would probably post a record crop in November, all-time record for the U.S. as far as yield was concerned, and of course, total crop size. Whenever you look at the acres that we went over, but I'm not so sure that they're going to be able to increase yield at this stage because I do think we're robbing bushels with this wet into harvest. There's no question that it's going to be really tough. You're not going to harvest the same beans that you thought you were going to previously. That's unfortunate. It's just the simple fact of the matter. So there's a lot of things going on with the bean market, but I guess short term, I'm not super bullish. Longer term, though, boy, I don't know how you couldn't be supportive.
I agree with that one 100%. Man, what happened to this wheat market today? Spring wheat was set a new contract highs. It was at levels of, spot futures highest price in more than a decade. But then we just we sold off here at the end, and it was all three wheat markets finishing lower here today. What are your thoughts with what we saw in wheat here at Tuesday's close?
20 cent off the high, for instance, for March Minneapolis wheat, you look at, I don't know, July Chicago, you're only 8 cents off the highs. But, some of these wheat contracts, in my opinion, were following along. Minneapolis wheat, there's kind of a fervor there. How high can it go? It's kind of an exciting market by all stretch of the imagination. But you've got to also remember that you got to have a reason to buy it above $10. And yes, it's a thinly traded market. There's not as many players there, but I'll tell you what, if you get on the wrong side of that market, that's a rough go. And so I think that there's probably some cold feet going on. There's probably some profit taking going on. Do I think the wheat market's over? No, I really don't. I think that you've got a reason to believe that this wheat market actually could stay fairly strong. And I do think with all three of your wheat markets, I feel pretty confident that you're going to still be trying to buy acres, in some fashion. Now, for the winter wheat market, you're probably getting a little long in the tooth there. But, I think that when you start talking about Minneapolis wheat, Kansas City wheat, I do think that there's going to be a fair amount of support under the market. And, I'll tell you what, this wheat situation is significantly tighter, not only here, but in the world. Now, yes, much bigger carryouts than what we're used to with corn, but wheat is used to having much larger carryouts, and this more snug situation, I think, is made a lot of people raise their eyebrows.
Yeah, very snug situation. As you mentioned, just the supplies of global milling wheat, that's been a big driver there, and I'm with you. I don't think the wheat market is over by any stretch of the imagination, and we'll see what happens here as we move forward the next couple of weeks. I know as well, it was just kind of a risk-on day today. Wall Street got strong earnings reports. We got a rising consumer confidence a little bit out there. The Dow, S&P, new fresh record highs. So obviously watching all that, watching the dollar, of course, all those factors are going to play into our markets and some of that money flow that we see into the ag commodities, Matt.
Yeah, absolutely. And I think, one of your benefactors as we move on down the line is going to be, for instance, cattle, live cattle. Great cattle on feed report and, versus expectations last Friday. Are we running a scant supply of cattle? Not necessarily. It's just we haven't built, our cattle numbers as much as what maybe some people thought that we were going to. And so at a time whenever demand is pretty strong, I don't think it's going to back off any. A lot of people say, well, I just wonder what restaurant demand is going to be like going into the winter. You know what? I don't care. And it's nothing against anybody that's in the restaurant business. It's that beef demand's still going to be strong. If we learn anything from COVID, it's that people found out that, they can eat 3 steaks for the price of 1 at home. Now, do I like going out to eat and taking my wife out somewhere nice and having a good steak? Absolutely. And I'll do that on a regular basis whenever those opportunities become available. But at the same time, if I like good meat, I can find good meat, and I think that demand is going to stay very strong, regardless of what happens in the winter time frame, regardless of what happens with COVID and with any restrictions we might see. I think that your beef demand is going to stay very strong. And quite frankly, I look for, like for instance, April cattle. I've been saying for a while I thought we could get to the 140s, maybe even push the 150 level. I'm still in that camp.
I know as well. We're anticipating firm cash trade here this week and starting to see some bid activity out in the country. I saw some 124s and I think even a 125 or 126 out there as well in the South. So that's going to be something to watch as well to see if the cash supports us here in cattle this week, Matt.
Yeah, absolutely, and I do think that there's going to be that. Demand again is going to be pretty strong. Boxed beef, I think, bottomed out here a couple of weeks ago. I don't think we're moving back down into that 280 level. Is pretty much where we were at whenever we kind of bottomed out. But I guess whenever you look over at feeders are stronger, than can be, and especially on the cash side of things. So you don't want to start talking about cash. It's been interesting on feeders. A lot of folks, they just can't find a deal anywhere, and people have been tight-fisted. $1,000 a head is pretty common to get for a feeder, and I thank goodness. I'm glad for your cattle producer. I mean, we've got a few cows, but it's not our bread and butter. But those guys that it is their bread and butter and gals, I'll tell you what, this is a nice thing for them to have, and it's a luxury for them. But I'll tell you what, it's well deserved.
Let's look at hogs. Hogs had a pretty rough day today, as we've seen a couple of rough sessions here in this hog market. What do you make of what's going on in lean hogs right now, Matt?
I just think it's a continued pullback from extraordinarily high hog prices. Okay, and so at the same time, I think your demand's going to be pretty strong. People are still, I don't know anybody that doesn't like eating bacon, and people are still going to be eating pork. We know that, but I've told you this before, and I'll tell you again, without a really strong, steady dose of Chinese demand, you're going to have a hard time seeing hogs at what I would call extraordinarily high prices. And I just think that when you got to 110 levels and above, it just, we overcooked this market, and we ran out of people being interested in wanting to own hogs. And so, in a speculative environment like this, I don't think that anybody's too interested in owning them above $80.
You mentioned bacon. I'd love your thoughts on this. I know a lot of folks are seeing the sticker shock at the grocery store on a lot of different foods, and seeing the sticker shock at the gas pump. I was in Maryland to DC this weekend and seeing gas pushing $4 on the East Coast there. I mean, we talk about inflation. That's been a hot topic. Everybody's used the word transitory, et cetera, et cetera. What are your thoughts on where inflation is at, and how this could continue to affect our commodity markets moving forward?
Yeah, I mean, I think that inflation is going to be here for a bit, and I don't think it's going to back off anytime soon. I think, as far as commodity markets are concerned, it's tough for me to think that it's going to do anything but be supportive for us. Now, how do we fix this? Eventually, the thing that I've been trying to talk to a lot of folks about is higher interest rates are likely going to be one of the ways that we're going to fix an inflationary environment. And I don't think that's going to happen right around the corner necessarily, but I do think it's going to happen soon enough that we all need to get our house in order in a year like this. I mean, what a wonderful year for an agriculture producer, especially a row crop farmer, a cattle producer, you name it. There's a lot of folks that are making a little more money than what we've made for a while. And I know it's very tempting to go out there and avoid paying taxes, with upgrades and whatnot. But, I think that shoring up our bottom line, getting our liquidity ratios where they need to be, and maybe paying off a little bit of debt might not be such a bad idea.
And on the flip side of that, I've heard a couple folks talk about possibly seeing interest rate cuts before we see interest rate hikes. To me, that just seems way out of left field. But obviously it's something that could happen. To me, that seems kind of crazy to think about.
We can't cut too much.
Yeah.
We could go to negative interest rates, I guess, but we can't cut a lot at this point. But it wouldn't surprise me in the short run. I mean, if you start raising interest rates substantially, I mean, we're going to bankrupt this country. I mean, that's all there is to it. But at the same time, I think you're going to have to gradually increase interest rates at some point over the next 3 to 4 years. I think that when you start inching those up, that's something that is going to become, I guess, normal. and maybe we're going to be doing that a little more often than what people want to see, especially if you're someone who's got a lot of money borrowed. But yeah, I don't think inflation is going anywhere for the time being. I do like owning hard assets. I like owning commodities. I think that as a producer, we're in a really good situation. But I also have to encourage anybody who's in that agricultural producer category. You know what? Make the most of this situation that we're in. I don't think this is going away right away. I think 22 is going to be a fantastic year for us again. We're offering up the opportunity anyway. Whether or not we're going to take the opportunity and make it a great year, that's another thing. But I do think that 22 looks great. You look at 23 prices, and you can lock in incredible income on 23 as well. But I think this fertilizer thing is going to have to back off at some point, but I don't see it happening until next summer. So if we think we're going to get cheap fertilizer by next spring, there's a lot of things that are going to have to fall into place for that to happen. I don't see it happening. But my whole thing is that I think for your 23 crop, your fertilizer, your inputs, a lot of those things will be cheaper than what it's going to be for the 22 crop. Thank goodness 22 is already looking at 540 corn. I mean, that's a really nice thing to see.
Well, and we'll see what the Fed does with everything on interest rates. We'll see what the input prices do. And of course, you mentioned getting the house in order. And if folks need a little help getting their house in order and looking at some of those prices for 22, 23, et cetera, and maybe, trying not to be too greedy and take a good price when it shows on the bottom line, I know they can get a little help from you and the team there at agmarket.net, can't they, Matt?
Yeah, absolutely. Just hop on agmarket.net or agmarket.app. They can get our information, research, all of our contact info, and the technology we offer. Some of the technology we put together is designed to help us maximize revenue and profit margins. And that's something I think we need to be monitoring on a pretty consistent basis these days.
I couldn't agree more. Agmarket.net, or again, you can check out the app, agmarket.app. Matt Bennett, appreciate the time as always, sir. Thanks so much, and we'll talk to you again real soon.
Absolutely. Thanks for having me.
Matt Bennett with agmarket.net, our guest today here on Market Talk. Find us online, markettalkag.com. It's been the Tuesday, October 26th edition of the show. I'm Jesse Allen. Have a great afternoon.